Distinguished guests, ladies and gentlemen, good morning. I'm the chief of FICC of Huatai Futures Research Institute. It's a great pleasure to share with you our observations of the industry. All right, now let's get started. First, let's talk about the current market. In the second chapter, I will talk about the macro trend, both in short term and in long term, and then I will talk about the micro analysis of the market. So you can see that there is a lot of risks that we can avoid. Recently, there are some risk incidents from overseas. You can see that the fluctuation is becoming more obvious. The interest rate of various countries are going down, and there are commodity price adjustment in major countries. And we can buy in some gold and silver and some Russian stocks. In terms of price changes, in terms of volume and price, within a certain time window, if you see the parallel increase of both volume and price, and then you can buy in. So from this perspective, starting from March, we are seeing the volume and price increases of soybeans and some of the currencies, and also the AUD to USD. Domestically, the asset is more resilient. This includes both petrochemical and coking coal, and the ferrous metal is going down. And now let me give you some long-term analysis. So this is quite macro analysis. From our analysis, we believe that both demand and supply are going down. And from the supply perspective, it has been going down at the global scale. On the supply side, we have the dual carbon targets. This means that no matter it is asset investments or productivity, the overall supply will not slow down in the long run. So I believe the supply side is not very stable, and we will not be able to dramatically increase the supply in the long run. And also, let's take a look at this deglobalization trend in terms of inflation. COVID-19 has broken down this trend, but we have felt this trend very strongly during the COVID years. In this year, we are seeing a lot of factors of deglobalization. For example, the United States, France, and Germany, there are strikes going on. Sino-US relations mean that deglobalization will continue. Populism overseas is rising, which is pushing up the risks. So for the demand side, we believe there are risks. So what does this mean for our era? It means that you cannot grow your business to very big sizes in general. This means that competition is becoming more fierce. It means that we will have to embrace the internal circulation of our economy, and there are implications of deglobalization over our economy. When both demand and supply are going down, then you will have to consider the price. If you look at this issue from a long-term perspective, then you will come to the conclusion that the price will be stable and it will not come back to a very low level. So this is just a macro long-term analysis. In the near term, we have to guard against inflation. So how should we fend against the high inflation from overseas? And when high inflation is over, what are the changes of economic policies at the global scale? So in the short term, we have to focus on two issues. The first is whose demand is going to shrink very quickly, and number two, whose balance sheet is of more resilience. We can feel that very strongly because of the bank liquidity implications. We know those with a very fragile balance sheet, they will have bank running, they will have pressure in terms of loan repayment. Well, fundamentally speaking, this is because of high inflation and high interest rates, and also the narrowing of the margin this year. We are witnessing a lot of challenges in this year. So, from the perspective of asset prices, what we need to pay attention to is that globally, given the high inflation and high interest rates and deflation, in the coming months, will the demand pick up in the near term? So no matter it is the credit loan duration or the economic development cycle, the deflation will definitely narrow the demand. In particular, at present, the Federal Reserve of the United States tells us that we cannot downsides the supply side. So how do we contain inflation? The only way out is to control the demand. So that is why we see that in 2023 there will be a general shrink of the asset prices. And we don't know right now the intensity of such trend, but this will bring about a lot more questions on when will the interest rate rise stop, and when will we start to embrace the decrease of interest rate. Here domestically, we know that the demand has touched down the bottom and is also starting to pick up. Domestic consumption is going very well. So the question here domestically is how this demand can spread to other industries, for example, automobile and real estate and other sectors. Specifically, talking about overseas situation, we have to talk about the bank run in the United States. And this is because of the decoupling of the interest rate in banks. I don't need to go in length to talk you through this incident. Let me jump directly to the conclusions. And we believe that this is only the beginning. It has far from entering its peak. And also, we have to take into consideration the countermeasures of the central bank. So this will not be defined as a systematic financial risks. This is by and large a regional risk. So we have to pay attention to the banking sector risks in Europe. I talked about the shrinking of demand and also the volatility and vulnerability of balance sheets of companies. And then from this perspective, we believe that the European market is more fragile. And if this continues to evolve, then a lot of the risks will end up in the banking sector of Europe. And we have to pay particular attention to shadow banking and also to the Credit Suisse. We have been following some CDS and some of the risk indicators of banks, and they both believe that the risks will expand in the coming months. From an economic perspective, The United States is still doing very well, and Europe is not performing that well because in the United States, 80% of its economy is built on consumption. If the employment market is very resilient, then its economy will not go down sharply. For Europe, there is the manufacturing industry and also the domestic consumption. For engine drivers, both France and Germany, they are highly reliant on export. If the manufacturing industry is going down, then the outlook is not very promising. We have seen some strikes going on, and then there is this energy crisis in Europe. Both are undermining the recovery of European economy in terms of resilience and sustainability. So from this perspective, I believe Europe is facing more and bigger problems than the United States. It's more fragile in terms of economic resilience, and its manufacturing industry is not very stable. So we can anticipate a lot of risks going forward in Europe. So that is why we believe that most of the commodity prices in Europe will be maintained at a very high level. For crude oil, it's related to the supply side, and it is also related to the strategic realignment of the United States. The Russian-Ukraine crisis is also adding to the uncertainties of the energy sector. If the energy price continues to fluctuate, it will have direct implications over the market of US and Europe. As I have mentioned, when the banking sector risks played out in the United States, it will further drive up the US dollars. So this is what we can do accordingly in terms of avoiding risks. So when there is fluctuations in Europe, USD will go up. And when US dollars go up, it will pose some pressure on prices as well. So for the Chinese economy, we have seen a very obvious trend of moderate recovery. But this is mainly in the consumption area related to travels and traffic jams and flights and restaurant indicators, all of which have shown that consumption is going back, both online and offline. But the sales of automobile and properties, some of the major assets are not so promising. So they are still fluctuating at the average line of the past 5 years. Infrastructure is very promising, and if I give you a ranking, I believe consumption is doing best, then followed by infrastructure, and then investment. So these are some of the high-frequency indicators. I told you that we have very promising landscape in terms of consumption, and I just shared with you some of our observations sector by sector. But I have to be specific that for consumption there is the peak. It will improve, but you cannot imagine one man having 6 meals a day. So that means that at this very important time frame, we are at the end of March and beginning of April, we have to pay close attention to this super readjustment of our economy. And I believe we're at the end of the recovery of domestic consumption, and we have to pay particular attention to the housing market and the infrastructure industry. And we have to see whether our economy can perform beyond our expectations.
So we are following some of the trade situation and import and export numbers, and most of the estimation shows that we are facing mounting pressure concerning foreign demand. And in terms of real estate, we are looking at the credit of residents. I think this kind of mortgage would be the first step to kickstart this whole process in terms of financing, because this kind of industrial chain will all start with a mortgage. I think in this regard, it is not picking up at the moment. And in terms of real estate, we are not having a very promising projection in this regard. For businesses and consumers, their confidence still needs more time to restore, and it also needs stronger policy support. In terms of large-scale infrastructure, I think it exceeds the expectation, because since 2021, we are seeing more and more positive signals in terms of government policy as well as capital inflow. We are making very promising predictions concerning infrastructure, judging from the number of orders and also the delivery of cement and other raw materials. I think this has exceeded our expectations, but we still need further statistics to see where real estate market is going. But infrastructure, it looks very promising. I think in terms of RMB exchange rate, we are having very positive projections, but in short term, we're still facing some uncertainties and the tension between US and China. And I think in terms of the exchange rate, it will fluctuate between 6.6 to 7 of RMB against the dollar. So we are actually adjusting our estimation concerning RMB exchange rate. So how do we make judgment concerning this recovery allocation strategies? So first of all, this kind of interest rate hike, domestically, we believe that in industry and in other businesses, we're all seeing this kind of clear signals of recovery. But in terms of foreign demand, it is still lagging compared to domestic demand. And also, another impact is that this continuous tightening of financial conditions has suppressed global demand. And we suggest that to look at this heavy metal and precious metal, because they are important asset to in terms of maintaining this value. Once there are risks, how do we maintain the value, or how do we ensure that we have the right portfolio in terms of asset? So we've chosen some of the most representative indicators of Chinese economy. In terms of conclusion, we found that the coal, coking, steel, and mining are more reliant on domestic supply. And second, we've chosen some overseas indicators, such as the PMI of the US and the balance sheet of the Federal Reserves. I think they are more reliant on foreign demand. So this kind of deviation between domestic and foreign demand will continue. So you may choose your asset portfolio based on this consideration of hedging the risks. And second, we also want to discuss what kind of asset allocation strategy should we adopt under the background of strong infrastructure but uncertain prospect for real estate. If we rely too heavily on infrastructure, and history tells us that this big picture of the whole economy is not so promising, but we are seeing some positive signal concerning the domestic stock market, the A share. And currently, we are seeing this transmission of domestic growth and policy as well as consumption, which can be clearly witnessed in PMI, in manufacture, and PPI is also going up. Under such a backdrop, I think this black construction materials are doing very well at the moment. So this kind of transmission effect will further help us to recover. And you can look for opportunities in coal, coking, and steel industry. These are some of the cycles of major industrial production. I think this capacity has already picked up. In terms of productivity, we are still consuming this stock. We are still undergoing this destocking process, and we will not be seeing a rising in terms of supply very soon. For others, we're also looking at the chemical industry. We are facing pressure concerning capacity as well as the product. These are some of the midterm perspective concerning the major indicators such as ferrous and non-ferrous metals. To be more specific, when it comes to commodities, we are also doing some estimations concerning the stock as well as projection of for Q2, and we did some historical analysis. We believe that the destocking situation would be promising concerning steel and aluminum. So this kind of destocking process will also be useful concerning this pricing mechanism. In terms of the basics, it also echoes with what I have said before. Another thing I want to focus on is the non-ferrous metals, they are at the very low level in terms of stocking, and about 5 to 7 years, the stocking situation is about under 20%. So we can focus on the industry that's more sensitive to margins, such as ferrous metals. And right now, the stocking index has been rising to about 75 to 85. And this destocking cycle is creating positive signal concerning this regard. And last but not least, let's have some brief summary. First of all, we are now facing high inflation, which will kickstart this price factors. And second of all, we need to take a look at this liquidity situation of the banks. In the past week, we see that there are some rebound happening. But we are also looking at a lot of risk factors such as CDS of the banks, as well as the market's reaction to the market production to the central bank's adjustment of its tightening of its monetary policy. So in the future, there are still risks in the future. So in short term, we suggest that you look at some of the opportunities in precious metal. In terms of domestic situation, we believe that with the support of the government, we will see very good prospects in A-share. We also need to follow closely the domestic demand and also the destocking process of commodities. We suggest you look at the black building materials and steel. In terms of far end, if reinflation happens, I think the major indicators would be the crude oil. We also mentioned the European energy crisis, so that has to do with the supply side. On the far end, I think if the problems happened in the far end, the crude oil price might also rebound, which might constitute more pressure on commodity price. And it will also kick up this pricing in terms of commodities. That's what I want to share with all of you. Thank you.